Hello and welcome back to World Traders Paradise. I'm Frank White. In episode 4, I showed you how to manage your risk so that one bad trade never destroys your account. Today we go deeper into the strategy. Today I am going to show you the RSI indicator, the tool that puts those green and red spots on your chart and tells you exactly when momentum is on your side. If you have been watching the chart in my previous episodes and wondering what those coloured dots mean, this episode is for you. By the end of this video, you will know exactly how to use RSI to add a powerful layer of confirmation to every single engulfing candle setup. And when you combine RSI with support and resistance and your engulfing candle, your confidence in every trade goes through the roof. Let us get into it. What is RSI? RSI stands for Relative Strength Index. It was created by a man named J. Wells Wilder in 1978. And in almost 50 years, nobody has found a better momentum indicator. That tells you something. In the simplest possible terms, RSI measures whether a market is overbought or oversold. Think of it like this. Imagine you have been running for 20 minutes without stopping. You are exhausted. You need to slow down or stop. That is what an overbought market looks like. It has been running up for too long, and it needs to pause or reverse. Now imagine you have been sitting down for 6 hours without moving. Your legs are stiff. The moment you stand up, you move fast. That is what an oversold market looks like. It has been falling for too long, and it is ready to bounce back up. The Relative Strength Index measures this on a scale of 0 to 100. Above 70, overbought. The market has run up too fast. Sellers may step in soon. Below 30, oversold. The market has fallen too far. Buyers may step in soon. Between 30 and 70, neutral. The market is moving normally. Now you may be wondering, Frank, I see green and red spots on your chart, but I do not see a separate Relative Strength Index panel. How does that work? Great question. The indicator I use is a custom version of RSI, which I programmed in TradingView that plots directly onto the candlestick chart instead of in a separate panel below. The green spots appear when RSI is in oversold territory, below 30. The red spots appear when RSI is in overbought territory, above 70. This means I can see the momentum signal right on the price chart without having to look up and down between two panels. Everything is in one place, clean and simple. When I see a green Relative Strength Index spot forming at a support level, that tells me two things at once. Price is at a key level, and momentum is oversold and ready to bounce. That is powerful confluence. When I see a red Relative Strength Index spot forming at a resistance level, price is at a key level, and momentum is overbought and ready to drop. That is my bearish engulfing candle confirmation, firing at exactly the right moment. Now here is where everything we have learned across all 5 episodes comes together into one complete trading system. I call it the Three Way Confluence Setup. Confirmation 1, support or resistance level. Price has returned to a key level that has been tested before. Confirmation 2, engulfing candle. A confirmed bullish or bearish engulfing candle has closed at that level. Confirmation 3, Relative Strength Index signal. The Relative Strength Index spot, green for bullish, red for bearish, is appearing at the same time and place. When all 3 line up simultaneously, that is not just a trade. That is a high probability setup with 3 independent reasons to enter. Think of it like a 3-legged stool. Each leg is one confirmation. With 1 or 2 legs, the stool falls over. With all 3 legs, it is rock solid, and you sit down with confidence. Let me show you this working in real time on the Euro-Dollar chart. Price approaches the resistance zone between 1.1638 and 1.1650. We identified this level all the way back in episode 2. Confirmation 1, resistance level. Price has arrived at our zone. First leg of the stool confirmed. Now watch the candles forming at that resistance. A strong red bearish engulfing candle closes right at the zone. The green candle before it has been completely swallowed. Confirmation number 2, bearish engulfing candle. Second leg confirmed. Now look at the RSI. A red spot appears right on that candle. RSI is reading above 70. The market is overbought right at resistance. Confirmation 3, RSI, overbought signal. Third leg confirmed. All 3 legs of the stool are in place. We enter short, stop above the engulfing candle, target at 2-to-1 risk reward. Price drops, target hit. Clean winner. 3 confirmations, maximum confidence, minimum doubt. Now let me show you something equally important. When RSI tells you not to take a trade, sometimes price reaches a support or resistance level. An engulfing candle forms, you get excited. But then you check the RSI and it is sitting right in the middle, around 50. Neutral, no momentum signal. Those are the white areas on my charts. In that situation, I wait, or I skip the trade entirely. Why? Because with only 2 confirmations instead of 3, the probability of success is lower. The stool only has 2 legs. It might hold, but it might not. Discipline means not only knowing when to enter, it means knowing when to stay out. The best traders in the world are not the ones who take the most trades, they are the ones who only take the best trades. My charts varies in colours. Pause the video and take a closer look. I'll wait. It's either dark green or light green, dark red or light red, or simply white. The Relative Strength Index helps you filter out the average setups and keep only the exceptional ones. Now for those of you who want to go one level deeper, let me introduce RSI Divergence. This is one of the most powerful signals in all of technical analysis. And it is surprisingly simple once you understand it. Normal market behavior, price goes up, RSI goes up. Price goes down, RSI goes down. They move together. Divergence is when price and RSI disagree with each other. Bearish divergence, price makes a higher high, but RSI makes a lower high. Price is going up, but momentum is weakening. This is a warning that the move up is losing steam, and a reversal may be coming. Bullish divergence, price makes a lower low, but RSI makes a higher low. Price is still falling, but momentum is strengthening underneath. This is a signal that buyers are quietly stepping in, and a bounce is possible. When you see RSI divergence happening at a key support or resistance level, with an engulfing candle confirming, that is one of the highest probability setups you will ever find in forex trading. We will dedicate an entire future episode to divergence trading. For now, keep it in the back of your mind as you watch your charts. Before I wrap up, let me give you 4 practical tips for using Relative Strength Index correctly. Tip 1. Never use RSI alone. RSI is a confirmation tool, not a trading system. Always combine it with support and resistance and your engulfing candle. Tip 2. The standard Relative Strength Index setting is 14 periods. This is what I use. Do not change it until you fully understand what you are doing. Tip 3. RSI works best on higher time frames. On the H1 chart, it gives clean, reliable signals. On very short time frames like the 5-minute chart, it can be noisy and unreliable. Tip 4. A Relative Strength Index spot on your chart does not mean enter immediately. Wait. Let the engulfing candle fully close first. Patience always wins. So let us bring everything together. Relative Strength Index measures market momentum on a scale of 0 to 100. Above 70 is overbought, below 30 is oversold. Combined with your support and resistance levels and your engulfing candle, Relative Strength Index gives you the Three-Way Confluence Setup, 3 independent reasons to enter the same trade at the same time. The more confluence you have, the higher your confidence. The higher your confidence, the better your execution. The better your execution, the more consistent your results. This is how World Traders Paradise traders think. This is how we achieve 75 to 80% win rates consistently. Next week, Episode 6, we are covering the EMA, the Exponential Moving Average. Those green and red flags on your chart that show the overall trend direction. Understanding the EMA will tell you whether you should be looking for long trades, short trades, or no trades at all on any given day. It is the compass of your trading strategy. Subscribe now and hit the bell so you never miss an episode. Stay disciplined, stay patient. Paradise is just one good trade away. I'm Frank White. See you in the next one. And do not forget, the future's past is our looking glass.